Welcome to House Lux Estate, your ultimate guide to financial wisdom and real estate knowledge. We're here to illuminate your path to financial stability and success, cutting through the jargon and confusion often associated with the world of finance and property. At House Lux Estate, we believe in the power of smart decision-making, and we're committed to equipping you with the tools you need to make those decisions confidently. We delve into the often overlooked aspects of financial planning and offer insights into the real estate industry that could help you turn your dreams of property ownership into reality. We're here to help you avoid the common pitfalls that can lead to financial instability. Today, we dive into a fascinating topic: 10 things that poor people prioritize in life, which they shouldn't. Stay tuned for some eye-opening revelations. At number 1, we have the tendency to prioritize instant gratification over long-term goals. This is a common trap that many fall into. Consider this: you've had a tough week and you're tempted to splurge on a high-end dinner to unwind. That's instant gratification. But what if instead you put that money towards a savings account or an investment? That's a long-term goal. Now, imagine making choices like this consistently over time. The high-end dinner becomes a car payment, the car payment becomes a mortgage, and before you know it, you're in debt. All because of repeated decisions made for the sake of immediate satisfaction. This isn't to say you shouldn't enjoy life or treat yourself occasionally, but by constantly choosing the temporary high of instant gratification over the lasting benefits of long-term goals, you're setting yourself up for financial instability. Remember, instant gratification is fleeting, but long-term financial stability lasts a lifetime. A second on our list is overvaluing material possessions. It's alarmingly easy to get caught up in the glitz and glamour of the latest designer clothes, cutting-edge electronics, or flashy cars. But here's the thing: these items depreciate in value the moment they're purchased. That brand new car, it loses value the second it's driven off the lot. Designer clothes, they're worth less the moment they're worn. Instead of investing in items that depreciate, it's smarter to focus on assets that appreciate over time. Things like real estate, stocks, or even starting your own business. These are assets that can grow in value and provide you with a return on your investment. Remember, material possessions might bring temporary happiness, but they won't secure your financial future. Don't let material possessions define your worth. Instead, focus on building wealth that lasts. Thirdly, we have neglecting savings. Saving money is more than just a good habit. It's a lifeline, a safety net for those unexpected emergencies life throws at us. You know, the sudden car repair, the unexpected medical bill, or the sudden job loss. Without savings, these situations can quickly spiral into financial crises. Moreover, saving isn't just about emergencies. It's about planning for the future, for the things you want and the life you envision. A dream vacation, a new home, or your child's education. These goals need financial backing, and that backing comes from savings. Neglecting to save is like neglecting to invest in your future, and that's a risky gamble. It's like sailing out to sea without a life jacket. So don't neglect your savings. Make it a priority. Start small if you have to, but start. Always remember, a penny saved is a penny earned. Coming in at number 4 is ignoring financial education. Picture a journey to a destination you've never visited before. Would you embark on this journey without a map or a GPS? Probably not. Yet this is precisely what we do when we ignore financial education. You see, money isn't just about earning and spending. It's about making informed choices that can help you reach your financial goals. But how can you make wise decisions without understanding the landscape of finance? Poor financial decisions often stem from a lack of financial knowledge. Whether it's not knowing how to budget effectively, how interest rates work, or the benefits of investing, ignorance is not bliss. It's a roadblock on your path to financial freedom. So invest time in learning about finances, read books, attend seminars, or enroll in online courses. Knowledge is power, especially when it comes to your finances. At number 5, we have not investing. When we talk about growing wealth, investing is a key player in the game of financial health. It's like planting seeds today for a greener garden tomorrow. However, some people have a misconception that investing is a luxury reserved for those with overflowing bank accounts. They couldn't be more wrong. Investing is not just about having a lot of money, it's about making your money work for you. Even with a modest income, you can start investing in small amounts. The magic of compounding interest can grow your money over time, helping you build wealth. Moreover, there are different types of investments to suit various risk levels and financial goals. But by not investing, you're missing out on this wealth-building tool. You're letting inflation eat away at your hard-earned money instead of using it to create more. Remember, investing is not just for the rich. It's a tool that anyone can use to build wealth. Number 6 on our list is living beyond one's means. This is a dangerous game to play indeed. Picture this: you earn $1, but spend $2. It's like digging a financial hole that only gets deeper and more difficult to climb out of. Living beyond your means is a surefire path to financial instability. It's like trying to run a marathon without training. You'll quickly find yourself out of breath and unable to proceed. When we spend more than we earn, we're essentially borrowing from our future selves. And trust me, our future selves aren't too thrilled about that. It's crucial to understand the importance of living within one's means. This doesn't mean you can't enjoy your life or buy things you love. It simply means being mindful of your spending and ensuring it aligns with your income. Remember, it's not about how much you earn, but how much you save and invest. 7th on our list is ignoring insurance. Insurance is often overlooked as an unnecessary expense, but it's much more than that. It is a protective barrier, a safety net designed to catch you when life throws you a curveball. Imagine your car breaking down or your home getting damaged by a natural disaster. Without insurance, these unexpected events can lead to financial instability. Moreover, health insurance is critical to safeguard against exorbitant medical bills that can quickly deplete your savings. It's not just about covering a trip to the doctor's office. It's about securing peace of mind, knowing that you're covered in case of a serious illness or injury. In essence, insurance is a crucial part of a sound financial plan. It helps protect your income, your assets, and even your retirement savings from unexpected and potentially devastating expenses. Remember, insurance is not a luxury. It's a necessity. Coming in at number 8 is not planning for retirement. This is a big one, folks. Often we're so caught up in the hustle and bustle of the present that we forget about the future. But retirement isn't just about leaving the workforce. It's about financial independence. Imagine, if you will, a time when you no longer have to work to earn a living. Sounds fantastic, right? But that kind of freedom requires planning. Without setting aside funds for your golden years, you're setting yourself up for future financial instability. Think about it. The cost of living isn't going down. And let's not forget about unexpected medical expenses that often come with age. If you're not ready for these, they can quickly drain your resources. So, start planning today. Set aside a portion of your income for retirement. It doesn't have to be a lot, but consistency is key. Remember, retirement is not an age, it's a financial number. And number 9 is not setting financial goals. Imagine taking a road trip without a map or GPS. You might enjoy the scenery along the way, but you'll probably end up lost. The same principle applies to your finances. Without setting financial goals, you're essentially driving blindfolded, hoping to reach a destination of financial stability. Financial goals act as your financial GPS, guiding you towards a stable and secure future. They provide a clear path that helps you avoid unnecessary detours and setbacks. Whether it's saving for a down payment on a house, planning for your child's education, or preparing for retirement, these goals are critical in navigating your financial journey. Failing to set financial goals can lead to financial instability. You might find yourself living paycheck to paycheck, struggling to pay off debt, or even worse, sinking into financial ruin. Don't let this be your story. Set clear, achievable financial goals and work towards them diligently. Goals give you a roadmap to financial success. Finally, at number 10, we have not seeking professional financial advice. This is a common pitfall that many fall into, thinking they can navigate the complex world of finances all by themselves. However, professional financial advisors are trained to guide you through this maze. They can provide you with the tools and knowledge needed to make informed decisions about your financial future. These experts can help you avoid common financial mistakes, like overspending or not investing wisely. They can also help you develop a clear financial plan, tailored to your specific needs and goals. This can involve strategies for saving, investing, and even planning for retirement. Failing to seek professional advice can lead to financial instability. It's like trying to sail a ship without a compass. You're bound to get lost eventually. Don't let pride or fear hold you back. Don't be afraid to seek help. Professional advice can be the difference between financial instability and financial freedom. That concludes our list of 10 things that poor people prioritize in life, which they shouldn't. We've discussed how prioritizing instant gratification over long-term goals can lead to a cycle of endless spending. we've highlighted the pitfalls of overvaluing material possessions, neglecting savings, and ignoring financial education. We've also delved into the dangers of not investing, living beyond one's means, ignoring insurance, not planning for retirement, not setting financial goals, and not seeking professional financial advice. These are all common traps that can keep you stuck in a cycle of poverty. But by making smart financial decisions and avoiding these pitfalls, you can set yourself on a path towards financial freedom. Remember, wealth is not about having a lot of money, it's about having a lot of options. Thank you for watching. If you found this video informative, please subscribe to House Lux Estate for more financial wisdom and real estate insights.